Hey, thank you for taking the time to click on today's video. My name is Matthew Johnson, and over the last 2 decades, I've spent time as a fiduciary helping to educate my clients and hopefully educating you as well on some of the basics of investing and saving for retirement. Now, obviously, one of the things that's in the news is all about inflation, and to stack bad news on top of bad news is the intervention of the Federal Reserve. What are the Feds looking to do? Well, the Feds right now are looking to start to raise interest rates. What does that mean? How does it affect us? And more importantly, how does it affect the stock market and our retirement? Well, the first thing that we need to keep in mind is that the Federal Reserve is responsible for keeping this delicate balance in our lives for the cost of the things that we pay for that are essential to us. Essentially, the Federal Reserve only has 2 ways of affecting the economy. If they want to warm the economy up and get it really humming along, they need to be able to push down on the gas pedal. That means that they're going to be depressing interest rates, they're going to be opening up cash reserves, they're going to be creating essentially a supply of really cheap money. In other words, it's going to be more likely that you're going to build a new house, you're going to build an addition, you're going to buy a new car, or invest in your business more readily if interest rates are really, really low. On the flip side of the coin, when the economy gets too hot, it starts maybe humming along too quickly, and the cost of goods and services are going up, the Federal Reserve has to do something about it. You and I don't want it, and they certainly don't want it. It's called hyperinflation. We don't want a repeat of the 1980s and 90s. So as a result, to cool the economy, what they have to do is they have to push on the brake pedal. They have to shrink the supply of money and increase the cost of money. You see, you're not as apt to, say, buy that new car and pay 10% interest as opposed to buy the new car when it only costs you 2%. So they've got this very delicate tightrope that they're trying to walk right now. Now, what do we have to be careful of? Well, the first thing is, it's becoming very evident to me that the Federal Reserve, they don't care about our feelings. They really don't care about the stock market as much as we would like them to care about the stock market. What this means is that if you're heavily invested in stocks and the Feds begin to raise interest rates, guess what? It's likely to have a negative impact on your balance. So some of us could look at this and say, you know what? This is just way too much risk. I want to get out of the stock market. That is certainly something that you should consider, especially if you're older and you're closer to retirement and you simply can't afford the loss. If you're still in a position, though, that you're buying and you're dollar cost averaging, you're still investing, still saving for retirement, using the interest rates and the volatility that higher interest rates could create as a buying opportunity could be a very good thing for you. Now, we need to remember that back in 2018, the Feds tried this and it didn't end well. They decided that they were going to raise interest rates, and boy, did they. Not only did they raise interest rates once or twice or even 3 times, but they attempted to do it 4 times. The first 3, the market kind of sort of absorbed it and said, okay, we'll play along with this game. However, when they went to basically increase interest rates the 4th time in the last quarter of the year of 2018, the bond market said, not going to happen. And stocks dropped by over 1/4, over 25%. So we need to be really careful of what is referred to as a taper tantrum. This is basically where the market decides, you know what, we're not going to stomach this anymore. We're just simply going to be the child in the cereal aisle. We're going to throw a taper tantrum. We're going to say no more to this. Now, are the Feds really going to raise interest rates 4 times, 5 times? I don't know. The fact that they're talking about it doesn't mean that they're going to do it, but it certainly means that they're going to prepare us for the fact that they could do it. So what are you doing today to protect your balances? What are you doing today to take advantage of this? I honestly don't think that they're going to raise interest rates 5 times. We have $4 trillion more in debt today than we had back then. So it's going to be harder for them to raise interest rates. But that doesn't mean that you just shrug this off. This is an opportunity for you today, before they invoke rate increases, to really start to analyze how you're investing your money. And more importantly, looking at the long-term game. What is going to be more important to you when you retire? Is it going to be the balance of what you've saved for retirement, or is it more important to focus on how much income you have for retirement? So, as a result, please take into consideration that this is an opportunity for you to begin to shift how you invest your money and begin to explore the universe of fixed income investing. In other words, investing in things that are safer, but things that are going to create a fixed, steady stream of interest and dividend income for you. Not necessarily just stocks that pay dividends. That's certainly something that you can implement, but common stock dividends can and often are cut when there's volatility. This is really about fixed income. Things like bonds and preferreds and business development companies, things that are going to create that steady interest and dividend production for you that you can spend while in retirement, not having to worry as much about the balance of what you've saved for retirement and where it's going. I hope this video has been helpful to you, helping you better understand what's going on in this crazy world of ours. And if you like this video, I encourage you to give me a thumbs up. It's always helpful. If you like our little videos, hit that subscribe button over here and that little bell. The notification bell will let you know every time we have a video. And above all, share it with your friends. Maybe they would get a little use and value out of this message. Thanks so much for watching, and remember, it's up to you to make today a great day.